Hello, everyone. Welcome to today's show. And if you're joining for the first time, this is part of our digital transformation series for which we meet every Thursday at 5:30 p.m. Eastern. We pick one topic related to digital transformation. And for today, we have a very deep topic. It's called fixed assets. And it gets really complex overall in terms of the treatment, the way it works. So we are going to have a lot of fun with that depth. On that note, we are going to start with everybody's intros first. If you don't know me, I am Sam Gupta, your host and principal consultant at Elevate IQ. Elevate IQ is the independent ERP and digital transformation consulting firm. On that note, I am going to move to Chris for his intro.
Thanks, Sam. I'm Chris Gherardini, the CEO and owner of Turnkey Technologies. We're a 28-year-old Microsoft Dynamics partner organization. So myself, I've been implementing ERP since the beginning of time. Someone once told me, not really, just about 35 years. But fixed assets, great topic. I mean, assets, it's money. It just doesn't look like money, but so caring about it, not losing it, those are all important discussion points for today. So,
just 35 years, Chris, right? All right. Thank you so much for being here. Abu, can I ask you to introduce yourself next?
Hi everyone, my name's Abu, so I lead the group here at Penny. We are a Sage X3 partner for the last 12 years, implementing ERP system for a wide variety of industry. Prior to that, I used to work for a Big Four consulting firm doing SAP, so not as much as Chris, but close to 15 years doing ERP. So.
Okay, only 15. Thank you so much for being here, Abu. Nirav, can I ask you to introduce yourself next?
Yeah, absolutely. Nirav Shah, I'm CEO of AdSearch ERP, premier Acumatica partner. Been in the ERP space for about 18 years, implementing ERP, all different industries. Fixed assets is important, but I don't want to lose sight. All you guys are the best assets. So just know that. And we're going to dive in more.
Look at that. That's the best pitch. Thank you so much, Nirav, for being here. Rajesh, can I ask you to introduce yourself next, joining for the first time?
Thanks, Sam, and glad to be on the panel. So I'm Rajesh Dixit, President and CEO of Neural Gate Inc. And as a company, we are basically in three areas. One is Oracle ERP implementation services. We also are focusing a lot on process automation and RPA configurations within the ERP space. We also are working with some of the Microsoft technologies. And in addition, we are in the process of actually developing a product for data archiving of legacy systems. Personally, for myself, I've also been an ERP consultant for, gosh, how long? I won't say, but probably more than 20 years. Started with Oracle EBS, then worked on the Oracle Cloud and some of the other ERPs as well, right? So, and fixed assets, probably 7 or 8 implementations now under my belt.
Okay, amazing. And on these panels, I think this is the first time we have some representation from Oracle. So thank you so much for being here.
Thank you.
Will, joining for the first time as well. Can I ask you to introduce yourself next?
Yeah. Hey, everyone. Nice to be here. Will Gutekunst. I'm a senior consultant at Withum, an accounting firm. I sit in New York, so located in the New York office. I specifically work with Business Central, so our Dynamics practice is one of our newer practices at Withum. But we're looking to slowly build it up and get a good team with us and work on some interesting projects. So I've been in the ERP space for about 5 or 6 years now, working mainly with Business Central and other of the applications in the Microsoft stack, and a little bit of experience with SAP previously as well.
Right. Amazing. Thank you so much for being here. Well, and non-Microsoft guys, buckle up because we have too much Microsoft representation in these panels. So we are going to have a lot of fun with that. All right. And if you're in the audience and joining for the first time, make sure you guys post your questions and comments. We typically try to cover them during the show. And if we run out of time, our panelists are going to make sure that you receive your answers on that note, I am going to start with the first question with Chris. And Chris, we are looking for obviously the boundary, but with fixed asset, I think the implementation process could be extremely tricky as well. And I don't know how many people understand how the implementation is supposed to work for the fixed asset. And if this is the first time you are joining, good luck with that, because you will probably need a consultant, to be able to do the conversion, to be able to do migration. So do you want to describe,
Sure.
the fixed asset implementation process?
So, and thanks, Sam. And so the simplest view of the world, everybody thinks, okay, today you live with a standalone fixed assets application. That's very common. I don't know how many are external, but what's over there? You get the assets, you get the depreciation, it's all over there, but it's manual in, it's manual out. So if you think about the world of implementing fixed assets in an integrated ERP model, you got to step back, and it's not just load the assets and the life to date and year to date depreciation. Hey, we're off and running. It's all the business processes that surround that. And where do assets come from? And if you think about just expanding out from that theme, and you think business processes, asset acquisition, how does that happen? It's a capital purchase. Am I buying a piece of equipment? Okay, does that come in on a rec that's approved, that goes to a PO, checks a budget? We receive that asset against a purchase order. Is there a great automated flow that knows it's a capital item, and so it sets up accounts payable and flows into fixed assets? It's in fixed assets. Somebody gets a work order. Hey, I got to get the rest of the details, because they don't all show up on the PO. So even this asset creation, they don't always come from a PO. Think about people that do projects, and they do construction projects, and eventually turns into an asset. Okay, so now you end up with project ledgers that are capturing a lot of data that turns into a monstrous fixed asset. So a whole different type of capitalization flow if you think about how do I capture and track all this stuff, because right, I need to know vendors, invoices, serialization. There could be a lot of details behind whatever you're building and capitalizing. So again, if you think about that creation process, or how does it come in, great. But again, business process, the other part, again, we talk about understanding tracking transfers. You think about the healthcare space, they have nightmares. They can. Where's that MRI that cost 150 or $1 million? Where do we put that? So they move stuff around and they lose it. So there's transfers, there's tracking, traceability. You think about processes of tagging assets, and we got to make tags, and so a lot that goes into that process thought. This management and maintenance of the assets. Everybody forgets about that part. That hey, is there a warranty? Do I have to have a PO with a vendor, a contractor to service my copy machine? What's the maintenance cycles? How do I cost that? It goes on and on. So I'll share you a great story, though. I'm going to tell you this story. This is an asset. So in manufacturing, you're thinking, oh, manufacturing. We talked about projects. We talk about just purchase order. But can manufacturing create an asset? And I had this challenge once to design a process where to make a gilt. And everybody goes, what's a gilt? A gilt is a pig that makes pigs. Oh, it's a pig machine. Okay, but you start off with a baby pig, right? Raw material, manufacturing process, cost, feed, everything. At the end of the process, I have a full-grown pig. Guess what? It turns into an asset, because now the pig is a resource that I'm managing in a manufacturing space, but it's a fixed asset. What is it, a couple $1,000 pig? I have no idea, but there's a pig as an asset. You're thinking, okay, a live asset? Well, it needs to be maintained in service, but it has, again, it gets complicated. So if you think about complicated business processes surrounding assets, that's the challenge, is think more than just, but again, loading the asset master, getting all the attributes in there, migrating year-to-date, life-to-date depreciation, doing it somewhere where you can practice. Hey, let's do a mock conversion. Let's do depreciation over here to see, oh, that's wrong. Fix, run it again. Updates. As time moves, you got to get more current depreciation figures. So it's a moving target, but a lot of this practice on the implementation, which you asked about originally, and proving out the processes. You do that in your test environment, your sandbox, whatever you call it. Practice to make sure the POs are configured. They know about a capital item. How does that work? Do I need a project ledger to do bigger capital projects? Maybe not your org, but again, there's a lot of simulation and testing to make sure you get to the point, because the numbers have to be perfect. Mock month end, do a depreciation, do a pro forma, run the reporting. Once you put it in production, you load those live balances, right? You got to be ready to execute processes. So,
Okay,
like the
so
pig
some
story, don't you?
very interesting commentary, and sorry, by the way, I like the pig story. I think this is coming third time, fourth time on the show, so great job there. The follow-up question I'm going to have for you, Chris, is I was reading a comment on LinkedIn, okay, and this is very interesting when you are going to change the perspectives. And perspective, when I call, it's going to be different departments, the way they are going to see things. So I was reading a comment from manufacturing, and typically there's always a debate between how manufacturing likes to see the assets. And when I say manufacturing, these are the plant guys, the shop floor guys, and the way they look at assets is very different than your financial assets. For them, when they are talking to ERP guys, oh, those fixed assets, I have no idea what those are. These are my fixed assets that I'm talking about. Those are sitting on my shop floor. So when you compare the shop floor view versus the financial view, do you want to paint some more colors there overall,
Sure.
how they differ? Because, for them, it's a very different story altogether.
And they do. And in the accounting world, and what am I buying? Is that an asset? Oh, it's less than $1,000. Expense it. However, we're going to, for example, tooling, and you look at the software applications that are tracking that type of tooling in a shop floor environment. So that may be a little different. Where are they assets? It's tooling. Organizationally, there's a lot of money in that. It's not on the books as a fixed assets in terms of CNCs and equipment at their work centers you're referring to. Much larger assets, same thing. Maintenance cycles, uptime, downtime, it does impact shop floor. And I think that's the assets that we're talking about, correct? Tooling versus larger type of asset structures. And so there is that. And again, what we do is we find smaller apps that track those micro assets, frankly, because I guarantee you somewhere somebody knows there's 100,000 in tooling out there in the shop that's not on the balance sheet. So.
Yeah, great insights there. Thank you so much, Chris, for that. So, Abu, I'm actually coming to you, but it's going to be really hard to beat the big story, and that's what Chris does all the time. He's going to throw up some very interesting story, and that's going to be really hard to beat. So, from your perspective, obviously, we are looking for slightly more depth overall from the fixed asset perspective. And I don't know, in your industries, I guess, you are probably going to require a lot more accounting layers from the fixed asset perspective. There are going to be IFRS, compliance issues for the public companies. I'm pretty sure you deal with them, and the lease accounting, I'm pretty sure you are going to have some layers there as well. So, Abu, do you want to share any commentary?
You've put way too much pressure on me, Sam.
Big as well as death, I guess.
Yeah, I mean, absolutely. I mean, fixed asset is, it's a tough topic, right? I mean, and Chris, he pretty much covered most of the bases over there. I mean, one thing that, also comes out a lot is, you build an asset and then you also deploy it in service, for example, right? So how do you trace, profitability for the asset, right? That's where it also becomes way more complicated. How do you, another scenario that we often come across is, the tools that Chris talked about. Now you have $100,000 worth of tools, and they're all lined out, but you're actually going out to the field, you're going out to a plant environment and servicing them, right? So how do you keep track of all those fixed assets going across the province, across the country? You're one of your guys is working on one plant site, his tool breaks down, and he just wants to send it to the other, right? There's not enough time to document it properly. The systems may not be in place, and suddenly, the tool's gone, right? No one knows where it is. So a lot of that, what we find is a lot of that tracking and tracing of the tools that becomes really complicated in, large scale service industry kind of, you're going out to oil fields or oil rigs or, fertilizer plants, you're a service company and you're servicing those tools. So in terms of geographical, where your tool is, that becomes very complicated. And then when you factor in that if you build your own machine and now you're going to go out and service those clients, now it becomes a fixed asset in service. You have to depreciate it, you have to track revenue against it, you have to track cost against it. Now if you have to maintain it, what happens to it? Is it a fixed asset? Is it a capital cost, or is it an expense cost when you're doing additional feature enhancement on the tool or on the machine and so on? So yeah, I mean, so one of the biggest issues that we find is is the tracking and the traceability of assets, right? Whenever you walk in, everybody knows where their asset is, but in reality, half of the time nobody knows where that asset is, right? They can't just look up and say, okay, this is tool or this equipment is exactly at this point. So that becomes one of the key issues, other than the accounting side in managing the fixed assets.
Yeah, so some very interesting insights there. And since you mentioned the tracking and tracing, obviously that's going to be really confusing, even if you have your data right. And in most cases, when I'm looking at these assets and when we talk about changing of the perspective, and you guys remember Tom Rodden, right? He has appeared on so many different panels. So we were discussing on a very specific scenario here. Again, I'm talking about the perspectives, right? So if you talk about your own asset versus your customer's assets, okay, these are two different things. You are selling product that becomes their assets. Okay.
Yeah.
So when you talk about tracking and tracing, the tracking and tracing needs to be both ways. Okay. And when you talk about setting up the data right, sometimes what these customers do is they are going to create the asset as the product and product as the assets. Okay. Then you have a real mess there. So I don't know if you have seen some, similar scenarios where you are going to have real confusion. You probably don't know what your real product is versus what your assets are. And then from the, life cycle perspective, from the workflow perspective, it's probably going to be mixed. Any more commentary there, Abu, by any chance, on my commentary?
I mean, we didn't come across those scenarios as much, but the ones we come across is, oftentimes, we didn't classify it as an asset, right? When the data comes in, people either expense it or they'll consider it inventory, or so somebody always have to go back and fix the accounting to make sure that it is tracked as a fixed asset rather than a regular product, or it's not expensed, for example. Or if they don't have the accounting systems in place, then they'll be creating a regular purchase order, uh, tracking it as an expense, and then someone goes in and does a journal entry to fix it, right? Because to implement fixed assets can be huge, right? A lot of companies you probably come across are maintaining fixed assets in the Excel sheets, right? Fairly large ones, right? They deal with it, And the other thing that also comes in is from a tax perspective. Oftentimes, the standard general accounting principles, you can depreciate something differently compared to from an income tax perspective. That's a totally different view. So so from that perspective, we have seen the complications, not necessarily what you have described, but I'm sure other panelists have seen that.
Okay, amazing. Thank you so much for those insights. So, Nirav, I'm actually coming to you. I don't know if you're going to have any sort of story, any more depth from the implementation process perspective, whatever you can offer, Nirav.
Yeah, no, that's great. Chris and Abu done a fantastic job so far. Very little left to even talk about here, but there is a story that I could share coming to Abu's point in Excel. Excel could seem harmless, right? Initially, you start putting your assets on there. Someone's really diligent. Now all of a sudden, right, that person leaves the company, another person comes in. The knowledge really didn't transfer over how to maintain those assets. Now that Excel sheet starts falling apart, you really can't. It's really hard to tell. When assets were in service. What's the revision control on that spreadsheet. There's so many errors. There's so many different copies of this Excel spreadsheet now, right? What happens? That's going to cause you to get audited, right? You're going to pay penalties, right? Why do that, right? Now that's one layer, right? That's a company that's just thinking about, okay, we need an ERP system now, and fixed asset is a problem. Now the second decision is to say, does the ERP have enough functionality to maintain our assets, our fixed assets, and our requirements about that, right? ERP is great for financial information, automating customer data, right? But when it comes to true fixed asset management, there is a line in the sand, right? You have to kind of think about, do you need a full service fixed asset management solution, or do you need ERP? Right? ERP takes you so far into being able to acquire an asset, whether that's going to be through accounts payable, you're going to manually put up an asset through a journal, or you're going to import assets right into the system. Then you got, how you're going to maintain those assets from a month-to-month basis. What kind of depreciation schedule you're going to implement? Straight line, is it going to be double declining, right? Those are few but limited options, right? They're enough to get going from the book side. But like you mentioned, Abu and Chris, right? There's some tax ways to do asset depreciation that doesn't get handled very well from ERP systems, right? You got to look at vendor maintenance, insurance information on these assets, right? How much functionality do you need in your ERP to maintain those assets? What is the depth and breadth of your fixed assets that you have in your system, in your environment, in your business that you need to track? There's challenges there, ERP, right? If you're going to do tax and makers depreciation, for example, for tax purposes, that's going to be a little tough in the ERP to do. You could do it, right? But you're going to maintain, two different assets, the same asset, two different books, potentially one asset, two different books in it. Your accounting team has to understand how to do that, run the right reports, give it to your accountant, right? Maybe you might have a situation where you may have a different tax place in service date versus the book place in service date, right? That could happen as well. So you have all these different variables with your fixed assets. It's really, really important not to glance over fixed assets when it comes to ERP functionality and requirements. And we got to find out, do we have the right fit here for your ERP objectives? Because what are we eliminating, right? We want to eliminate multiple systems when coming into an ERP system. So we definitely want to get rid of Excel, right? But outside of that, what else are we limited? Are we helping the accountants that are doing the financial analysis on these fixed assets, right? What else can we do, right, to make sure our fixed assets are tracked properly? Maybe they need RFID tags, right? They need barcoding, right? You need maybe the ERP or fixed asset system to be able to geo-track where these assets are, right? And some of these fixed asset systems, separate systems, standalone systems, do a very good job of that. That's the whole purpose, right? Now we look at that and say, okay, well, now you have a really robust system. Let's integrate that into the ERP, right? Now we could just bring ERP data that's relevant for day-to-day analysis and bookkeeping purposes, but leave the heavy lifting, on the fixed asset, separate third-party system if that's a requirement, right? It all depends, right? A company like Caterpillar, for example, right? Yeah, they're in Illinois. I'm located in Chicago. They're moving out of Illinois. But think about it. Think about their fixed assets, right? They're not using most likely, fixed asset from just an ERP standpoint. They have a whole different totally solution that they're managing fixed assets, but there's integration within the ERP to that system so they could review assets on a day-to-day basis.
Okay, so some very interesting commentary there, and we are probably going to take everybody's feedback in terms of how they feel about having an additional system, because obviously, yes, you are so right that if you are looking for the full cycle management of the fixed asset, obviously your ERPs are probably not going to do RFID tagging, etc. Sure, from the technology perspective, I get it. But at the same time, when you are going to introduce a moving part, you are looking at a lot of problems. In the case of fixed asset, it might be okay because you might keep this completely standalone. The only thing you need to bring it, journal entry, one-day job, no big deal. If you have, let's say, 20, 30, 50 fixed asset, you could probably do that. So it's not as moving apart as if you have an operational component that is going to be part of your architecture. The question that I'm going to have for you, Nirav, is going to be overall in terms of the implementation. What is your recommendation? Are you recommending that they should have probably the best of breed system for the fixed asset, or maybe use the Excel sheet in conjunction? What kind of integration are we talking about from the recommendation perspective?
Yeah, Sam, I look at being able to talk to the audience members and giving them, advice, right? In terms of what's the best route to go if they're seeing, fixed assets and that's an issue in their business right now, and how to better track it. And there's a couple options out there, right? I think that's the best what we could do for our audience members and our customers at the end of the day. But the integration is important, right? Because ultimately you're going to have an ERP system, right? In order to track your financials, your order management, your budgeting, all that stuff, right? Financially. But if the decision is made to have a separate standalone fixed asset solution, we got to understand who that primary user will be, right? Why do we need that, right? It can't just be anybody, right? That's someone that's not, going to be maintaining the assets to the level that they need to in that particular fixed asset system. Then you might as well just use the ERP fixed asset system, right? But the main user, right, needs to have a role identified that's designed to essentially follow the asset all the way through its life cycle, right? Provide analysis, provide ROI on that asset, right? How much money you're making back on that asset versus how much you spend on that asset, right? Budget to actual, giving you idea when that asset might need to be replaced, right? What is, the market value to sell it right now, right? What vendors are out there? If that asset is out of commission, what impact is that going to have, for example, manufacturing, right? The asset has to be down. Capacity planning now has some issues, right? You need to be able to plan around that now, maybe divert, capacity or, production to another work center if that particular asset's down internally, right? There's a lot of consideration. I don't think there's one size fits all. I think more importantly, it's going to be on a case-to-case basis on, what type of tracking and how important is that asset to the bottom line of the business.
Okay, amazing. Thank you so much, Nirav, for those insights. So, Rajesh, I'm actually coming to you. So, obviously, you deal with very large system, and typically, when you look at the capabilities, the mid-market systems, they are probably not going to have as deep capabilities as you are going to find in the larger systems.
Right.
Especially when you talk about fixed asset, where you have to maintain multiple ledgers, multiple type of books, and the taxation is probably going to be slightly deeper as well. RFID, not too sure. Probably you still require the add-on, if you require that technology. So from your perspective, whatever commentary that you can offer, from your experience.
Yep. Thanks, Sam. So first of all, I think Chris, Nirav, Abu, all of them really covered a lot of the areas there. A couple of things that stands out, and I'm going to talk more from an larger organization perspective, right?
Yeah.
So what happens with a fixed asset implementation is, besides, like, first of all, you can't really think about it as an independent system on its own, right? Because it's so tightly integrated. We're integrated with GL, integrated with capital projects. You need to be mindful about how your CIP assets are going to work. When are you going to put the asset in service? What's your strategy for like salvage value recovery, and how are you going to take those assets? Like when you are implementing a new ERP system, are you going to bring your net zero value assets into the system? So in terms of my experiences, I'll tell you like a couple of interesting ones, right? So one was that in one of our ERP systems early on, we converted like all of the fixed assets from a legacy system into a ERP system, right? We talk to the client. Client says, well, sure, you don't need to convert anything which is like net zero value, right? um, because it's like retired asset, right? And then we find out and we talk to the controller, and he says, well, those assets are still on my books. So now here we are after the UAT cycle, now changing our code and getting the retired assets in also, right? So things like that you have to be really mindful about, that it's so like tightly integrated with the other parts, right? The other case that I ran into was like the fixed assets team early on, when you're doing actually like the purchasing or the requisitions or the invoicing, right? It's important to get the fixed assets team, or at least some representation of them in the workflow, right? In the approvals. Because what we find is otherwise they are, they are picking up the phones and calling the other teams and saying, okay, what did you approve here? I don't know the accounts. Your accounts are not right. This is like the amounts you have set there are not right. So a lot of things happen like that, right? So it's important to get those fixed assets teams approvals in place, right? Right in the purchasing, I mean, in the front end part of the whole flow. The another thing that that we ran into was coming back to this one of the clients that we had was that when we converted these net zero assets finally, and then first we realized that next project we said, sure, we're going to now convert all the net zero value assets also, right? So retired assets, and whichever are on the corporate books. Now we go in there and we find that in the old legacy system, the assets were being owned by departments or by accounts which are already basically disabled, right? And here now again we have a challenge, right? Okay, so you want to bring in the retired assets, but now the data in the old legacy system is not really up to the mark, right? So how are you going to bring that in? So things like that happen. We have to be really mindful of all of those when we are implementing like a fixed asset system. The other part I ran into was like in one of the big public sector organizations in Canada, right? So there's some very interesting scenarios, like they execute like $1 billion projects, right? And like when they build say a railway station or something, right? And now they so under like when the station is in construction, right, it's all considered a CIP asset, right? There's literally thousands and thousands of transactions in a $1 billion project, right? Now you're going to want to put that in the CIP asset bucket initially. Now you're ready, the station opens, right? Fine, okay. Now you move that to in-service asset, right? And now what happens is 2 years down the road, they say, oh, we need to now renovate the washroom. We need to put in some, one more elevator there. Now you have to recapitalize the asset, right? And again, even like bigger systems, right? Oracle or, like Dynamics and all that, right? What happens there is it's not really handled that well, the recapitalization. The other part that comes into play is the accounting standards, right? So what happens with like in a multi-country implementation, right? In US and Canada, like usually follow the GAAP standards, and then the Europe is on IFRS. And now what happens there is that, like the GAAP doesn't really allow you to revalue an acquired asset, right? Whereas IFRS allows you that. So now you have to deal with those accounting treatments differently in different countries, right? So a lot of these considerations come into play. So when you are really looking for an ERP system, first of all, you want to make sure that all of these scenarios can be tackled, or at least you have some approach in place that how are you going to tackle these different scenarios, right? Secondly, then you also have to think about the scale of your assets, right? So if you really have like 50,000 and 60,000 assets, right, and they are like located all over the world, now you have to have the ability in the ERP system to have like a different asset book, a different tax book per country, right? And you want to be able to associate that asset to that particular country, so that now when you are reporting, right, you want to be able to follow that country's specific rules, right? Not everyone is is like adhering to IFRS, right? Even though Europe is mostly now saying that they are going to be on IFRS, right? But even like, for example, large multinationals, right, have presence in APAC, they are in India, they are in like Europe. So you now have to really make sure that you are following all of the rules and regulations of depreciations, of calendars, and how you're going to report your assets on the books, right? So all of those considerations come into play while selecting the ERP system. Once you select this, then the whole implementation process, as Chris was mentioning, right, that becomes a challenge, right? You have to make sure you are involving the asset accounting team. You want to make sure you are involving the controller group. You want to make sure you are involving the capital budgeting group, the project managers, right? All those teams come together just like for a fixed asset implementation, because every team plays a part, right, in getting that one, like part of that transaction, right, of the fixed asset, and how it gets recorded into the ERP system. So it's really when we think about fixed assets, well, you say overall it doesn't look complex, right? But as soon as you go one level deep, all these complexities open up, and now you really have to deal with all of these scenarios. And to a consulting organization, when they first go in, oh, we are going to do the main flow, right, the happy path and all that, and now you get blown away by all of the exception scenarios, right, which take another 90% of your time, right? So you have to be really mindful of all of these things when you are selecting or implementing like a ERP implementation for fixed assets.
Okay, amazing insights there. So I am going to build on your commentary. Some very interesting insights, by the way. I mean, this is a first time I'm getting the real taste of finance in the discussion. So great job there overall in the kind of terms that you have used. Obviously, salvage value is a big one. CIP assets, maybe you want to clarify a little bit in terms of how that workflow works. Not sure if everybody is going to be familiar with that. And then you also mentioned the CIP to in-service, sort of transition there. So maybe talk a little bit about that. And then the other point that you mentioned when you talk about the revaluing of the asset from one accounting standard to the next, when you are going to go from your GAAP to your IFRS, it's going to be really challenging. And if you're juggling with 3 different systems or 5 or 15 different systems, good luck with that. So I don't know.
Yeah, no, it becomes very, very, very tricky very fast, right? So, for example, like the CIP issue that you mentioned, right? So CIP assets are called like the basically construction in process assets, right?
Yeah.
So what happens is if you don't have a capital projects module, right, now you are basically relying on all your AP transactions and all your PO and requisitions, right? And now those can flow into fixed assets, and basically you can track those as asset transactions, right? What a project does give you an ability is like by project and tasks now, right? You have all of those transactions against a capital project stored into the system. So now when you are like doing a CIP asset, you are actually now not going to a fixed asset module, but you are actually looking at your project, right? To say, okay, these are all my transactions. This is how the CIP asset is composed of, right? As soon as you are ready to put that asset into the service, you basically, in a capital projects, if you get that module, right? I mean, again, as you know, most of these ERP vendors are going to sell you all these modules separately with a heavy price tag, right? But if you get the projects module, now that gives you an ability is to really manage all your capital project as well as your assets really, really well, right? So that's the CIP part of it, right? The salvage value part, I think what happens there is, it's a little more simpler if you are aware of the some of the things that you have to account for. Like you want to make sure that if the asset is still on the books, you want to take it into your new ERP implementation. You also want to make sure that that the salvage value is recorded properly, and then you are depreciating the depreciation amounts are being calculated correctly based on the initial cost and the salvage value, right? The other part then you referred to, Sam, was about how to deal with this gap and this IFRS standards, right? So what we did in one of the big fintech multinational companies that we rolled out Oracle at, right, was to basically say that like as a corporate consolidated books, like if the headquarters was US, right, then we were reporting based on the GAAP part of it. And then for every country, right, we were making sure that we were following all of those rules. And we took all of those asset transactions in a EPM kind of product, right? Where you are now taking all the transactions and consolidating them to do your consolidated reporting. But now individually at the book level, you are still complying with all of the different regulations, because Oracle allows you by book to maintain different depreciation rules, different depreciation calendars, and like all the nuances there, right? By country.
Okay, amazing insight there. Thank you so much, Rajesh, for that. So, well, I am coming to you. So, I don't know, Amit, if you are going to have any different experiences than what everybody has already spoken about. Maybe, if you have seen any specific, nuances in the industries that you typically operate with. So, yeah, please go ahead and share your commentary. Well,
Yeah, you make it tough on me. You make me go last after everybody already.
sorry.
It's
Next
good.
time we'll do the opposite.
It's okay. No, I think that's actually a perfect segue, because a lot of the work that I've done, especially recently, has been with SMBs, so small and medium-sized businesses. And you see oftentimes with them, especially with fixed assets, it's kind of a module or a part of their business that's often overlooked. So they're oftentimes tracking this, and their ERPs, generally speaking, are legacy or outdated systems, and they're oftentimes tracking their fixed assets just in Excel. While that can kind of work to some extent, obviously there's a lot of room for error when you're just tracking these in Excel, the depreciation, especially the acquisitions. So when you're migrating all of these over from Excel into an ERP for the first time, first it's important to kind of just define the business processes for just acquiring a fixed asset and managing these fixed assets. So I know we've touched on a little bit more of complex example, but just kind of bringing it back to the bare bones is really just how are we going to acquire these? How are we going to depreciate on a month-to-month basis? What depreciation methods do we want to define for all of our fixed assets? Maybe this isn't something that we've really thought much into before. So it's important to go through the whole AP process, bringing in a fixed asset, putting it through approval, managing the ledger, and understanding that now that we have our fixed asset ledger and our GL integrated, that we don't need to be doing different transactions for depreciation against the fixed asset and then additional GL impacts. Understanding that's kind of all taken care of in one system. So just understanding the benefits there of a fixed asset, and oftentimes we can use add-ons to the ERPs, especially if we have a little bit more of an intricate fixed asset process. Maybe needing to track our fixed assets a little bit more efficiently. Add-ons can help as well. So it's important to understand that the combination between the fixed asset ledger and the GL is really ideally going to help save time and efficiency, especially with those bookkeepers working internally to record the depreciation, acquisitions, write down, salvage value, etc.
Okay, so very interesting insights there. So, do you have any sort of examples that you might be able to offer based on the intricacy that you are talking about of the add-ons, where add-ons are going to add real value in the process?
I'm not more towards the add-ons, but I mean, a more relative story would probably be just when you have those fixed assets, that ledger stored in just in a spreadsheet in QuickBooks, or I'm sorry, Excel. There's that risk for those balances not balancing out with the GL. So when you're bringing those balances over during an implementation, you want to make sure those acquisition costs, those accumulated depreciations, you want to make sure those are all tying out with your balance sheet. And the balances that you have stored there. So I've seen many times where we've had to make adjustments on the fly because those weren't initially accounted for. But there's those times where you got to make those adjustments. So.
Okay, amazing. Thank you so much, Will, for the insight. So, Chris, I am coming back to you. Any comments or any horror stories?
Yeah, I got to pick on Nirav, man. You're living in a world where you're going to that third-party fixed assets. I'm always bringing it into the ERPs. I'm very lucky. Will, you too? BC and F&O. So BC has fixed assets. Not much else. F&O has very robust fixed assets, including a full suite of asset management to get into preventative maintenance. And those apps both came out of the European market. So they deal with all the international complexities very, very well. But, there's a few points I didn't make, even as you think about just the complexities and even gaps. And so for the audience, you're not going to find a solution that fits everything. And I think even to Nirav's point is, do I go to standalone? Standalone it kills you because there's so much integration that needs to be done in so many businesses. I've got a client project right now and we're scoping it with BC, Will, so this will make sense. But as you think about fixed assets and the nature of your business, and what if we're using those assets to service clients? Well, now linking assets to project resources, dealing with schedules and calendars and availability.
Yeah.
Abu was right on. Asset profitability. When do you get rid of it versus maintain and service it? So there are gaps in most solutions that'll connect assets to project resources and let you do the costing and revenue analysis. Another twist, we've got a group that they buy big things like airplanes and trains and stuff, but big assets, but they're leasing them. They're leasing them, but they're leasing them to somebody else. So there's this triangulation between I got an asset, I got a lease where I'm paying somebody. Now I got a transaction with a customer where I'm billing them. Oh, wait a minute. In the iterations between all of them, most of the systems don't have all the connection points you need. So what you're going to find is there is going to be a lot of manual bridging. So you can bang your head on things. And again, unless you're in that tier one model where you're doing billion-dollar transactions, you're correct. The robustness of those systems are so much more profound. But as we move down to mid-market, and that's what Nirav's point is in smaller systems, you're not going to get all that capability. You're going to be doing a lot of these processes externally, manually. Even asset management, where you're tracking the maintenance and all that and profitability, that's a dream for a lot of small businesses because the systems just don't have all that stuff out of the box. But like I said, the complexities, we've touched on a lot of great points that are coming in terms of some of the challenges there. So, I can keep going, but.
Yeah, so Chris, I am going to have a follow-up, question and the comment for you, based on the experience that you have had. And typically, when you are replacing these siloed applications, obviously there must be some sort of problems, and that's why you are replacing them, right? So when you talk about the operational integration, and that's what I like to focus on. If these assets are some, your buildings or whatever, they're just sitting there, you are simply accounting, who cares? You can do it in the external system. But if it is going to be as part of your operational workflow, and overall from the traceability perspective as well, the system limitation is going to be highly important there as well, because some of the systems are going to have, let's say, just the serial number for the asset. Some of them are going to have some sort of composable assembly, because the kind of assets that you mentioned, especially if you talk about asset as big as an aircraft, okay,
Sure.
You are looking at tracking each of the individual part that goes
Maybe
inside
not.
the aircraft.
Maybe not. Not if you don't build the aircraft, you're not tracking every part inside the aircraft, frankly. And one of the things in our Dynamics world is fixed assets is a free module, so you're not buying it. So part of the ambition here is, why am I paying that guy when the software is included? That's part of it. Now, if it doesn't fit the requirements, it's a different conversation. But to your point, that's normally not a challenge. They're not tracking the components of within an aircraft. When they buy an aircraft and they lease an aircraft and they're charging somebody else for it, they're not tracking, they're not doing the service on it, but they're managing all the contracts to do the maintenance. They're managing the lease agreements. They're managing the billing arrangements with the customers. I think the same situation in some of the other products they have is because there's destruction. Some of these assets gets destroyed. And so, how do you adjust billing, adjust the lease? We got to replace it. Just the complexities of managing the assets. And again, when you're using assets as a source of revenue versus a traditional, it sits there. Like I said, it's a little different sets of complexities that come in when you start using those assets to generate business, or in manufacturing, right? Where the serviceability and the uptime on that asset impacts revenue, frankly. So.
Yeah, amazing insights there. Thank you so much, Chris, for that. Abu, I'm coming to you. Any horror stories? Any comments over comments? You're on mute, by the way.
Sorry about that. Sure. I mean, so I'll just pick up on the standalone system versus one system, right? It's a conversation which is not just true for fixed assets; it's true for everything, right? Standalone inventory system, standalone finance system, standalone manufacturing system, right? So again, it just comes down to what is the complexity of your operation, right? If you have a large construction in progress kind of assets, right, you're going to build an asset over 2 years, 3 years, and then put it into service and make revenue off it, then it just becomes, you need a much more tighter knit system with the operations in order to track all the POs, all the costs, all the labor costs, all the additional parts that are coming in. It just becomes harder to track, and probably need a more integrated system compared to if you're just building a fixed asset and then just selling it, right? That probably requires a little bit less complexity. Other complexity that we have seen is coming in. You have the same vendor who's supplying parts for a fixed asset, like a construction in progress asset, and then is also supplying parts for regular maintenance work, right? So now the accounting has to figure out, make sure that all gets coded properly, right? In one instance, it's an expense. In the other instance, it's an asset. It's going to CIP. So these sort of complexities often come into play. The other thing that we've often found, especially in the mid-size, is especially people maintaining in their Excel sheets when they're moving to, more formal fixed assets, they can never reconcile what was the starting value by asset, how much did they exactly depreciate, and what is the exact book value, right? Everybody says they know it, but as soon as you ask them for it so that you can import the data in, oh, we can't do it, right? So that's often, a lot of times that we come across, and it can become problematic, especially when you're scaling up or you're getting new funding, because that's when they want to see the exact books, or when you're doing geographical expansion, across different countries. So,
Okay.
yeah.
Amazing insights there. So I'm going to have just one follow-up question for you. So you mentioned a term called formalizing the fixed asset. So at what point do you call the assets to be formalized in your books?
I mean, so again, that can be a tricky question, right? Sometimes you're also building the asset at the same time you can get a useful service out of it, right? So it's, definitely, and then, the different standards, IFRS, etc., come into play. So again, a complicated question, but as soon as generally you can start getting, useful output from it, that's where, it has moved from a construction to a formalization of the asset, right? Now it has become a full-scale asset that you can start depreciating upon.
Okay, amazing insights here. Thank you so much, Abu, for that. So Narav, I'm actually coming to you. Any comments over comments, horror stories?
Yeah, no, I mean, what everyone says, spot on. Chris, I agree with you. As much as we can, let's try to keep it in the ERP system, right? There's functionality there to keep it in there. But, as Rajesh was mentioning, some of those billion-dollar companies, right, that have all of these other complex requirements, there's a whole separate requirement there on the fixed asset side. So, if you're coming off of Excel spreadsheets and you're importing journal entries, I cringe at that. You don't need to. There's already fixed asset capabilities. Use it right out of the box. Use the depreciation, automated depreciation process that are available there, because that's going to fit the bill for so many companies, right? From a fixed asset standpoint. Furthermore, you're looking at, you could do the disposal, you could do salvage value, you could do all these, what I would call very common fixed asset, functions in an ERP system. So, sometimes, even though you think you might need another system, take a step back a little bit, right? What exactly are you doing? Do you have those multinational need requirements, multi-tax requirements, essentially, for your business? So, I think everything that we could do, right, try to focus in on the fixed asset module. If you're doing it in Excel spreadsheets and you're importing it, stop that now. Do it in the ERP system, that you're selecting. Use that unless otherwise, right, until there's a better justification to do it elsewhere.
Okay, amazing insights there, Nirav. Thank you so much for that. So, Rajesh, I'm gonna come to you. Any horror stories or comments over comments?
Yeah, so I'm going to address 2 points. One was where Nirav and Chris referred to, right, about integrations, and I rarely see. I mean, I know there are a couple of ERPs, the larger ones, which actually have the enterprise asset maintenance module incorporated as a part of ERP, right? However, in like Oracle, for example, like the EAM is a whole different product, and it has to interact with the ERP. And we came into like a lot of issues because of the integrations. Because if you're now talking about like asset maintenance, and now all those transactions have to flow from ERP into an asset EM maintenance kind of software, back and forth, right? The integration becomes very, very, very complex, and maintenance becomes a nightmare. So even though, yeah, you start off with best of breed, but you have to really look at the total cost of ownership, right? What you're going to have at the end of the day. It's very important to pick the right product, right? There, which will give you the desired functionality you have. Don't look for all the, the like the best, which has all of the functionality, 90% of which you're not going to use ever, right? The second part of that was Chris referred to in the very first question you asked him, and that was about conversions, right? The mock cycles are extremely important, right? Because whether you are taking it from a spreadsheet, whether you are taking it from a legacy fixed asset system, and now bringing it into your ERP fixed assets module, It's important to do mock cycles. I typically recommend for the larger organizations to actually do 2 full mock cycles, and we actually, take those match the period ends also, right? So one of the topics, I think, Sam, you had asked whether you should have or whether it's recommended to have a separate environment or an instance for conversion, right? And I definitely am a big proponent of that, especially for the larger organizations, right? Because you want to have that like a pristine instance where you are now going to bring in, say, you are going live in July, and now you should do your mock runs for your March or April period close, and make sure that they're matching your asset closing transactions, or the closing values of those assets in your legacy, right? And once you have done this a couple of times, or at least twice, I would say, then you are in a position to say, yeah, my conversion looks good, my all my transactions from my legacy are coming here, okay, right? So that's what I would say, like in terms of that conversion, that you should really ideally have one conversion dedicated instance, especially for larger transactions organizations, right? And then have those mock cycle runs.
Okay, so I definitely need some more details on the mock cycles, because people, if they are not familiar with how to sort of replicate the mock cycles, obviously now we agree that, okay, this is going to be a separate environment. So are we going, let's say, 2 periods back and sort of doing the depreciation schedule 2 periods back? So do you want to describe the whole process, how that works from the mock cycle perspective?
Absolutely, yeah. So what we typically do as a part of the larger implementations, right? Again, sometimes you may be able to get by with 1 mock cycle. However, for the larger ones, you want to have 2. One is during your what we call as the system integration testing, and the second one would be doing the user acceptance testing phase. So what we do is we have you do your conversion development in a separate instance altogether, where you bring in the transactions, make sure everything is working. Now with your UAT instance, you start very fresh. For example, like in the second mock cycle will be your UAT, user acceptance testing, and that's where you now are going to bring in all of your you decide that, okay, I'm going to make sure that all my financial transactions match my legacy system transactions, right, or the values at the end of a certain period. So let's say you decide that period is March end, right, and your period close is on, say, April 5th. What you're going to do is to configure that UAT instance. You're going to say to your legacy folks, as soon as your GL is closed on April 5th, right, we are going to take all of that data, right, for fixed assets and for GL, and take it into your UAT instance, right? And after that, the transactions that happen after, like in, say, April now, right, in the legacy system, right, or which is going to be decommissioned soon, right? You want to make sure that the depreciation runs you are going to replicate in the UAT instance. So at the end of April now, we have taken the starting point as March end, and now at the end of April, you want to make sure that your depreciated amounts for your fixed assets, and I'm talking purely from fixed assets point right now, right? You want to make sure that those amounts are matching, and now you take those 2 reports and say, okay, this is reconciled, right? And that's extremely important. And you do that twice, and now you're good to go, and you don't have like surprises in the production live environment.
Okay, amazing. Thank you so much for those insights. Well, I am coming to you. Any comments over comments, horror stories?
Yeah, I think one good thing that Chris touched on before was project reporting when it comes to fixed assets too, and seeing the profitability of those fixed assets. So, assigning those different fixed assets to different phases of a project, and assigning costs and prices on an hourly rate for that fixed asset along the stages of a project is very helpful. And being able to run those reports to see, how is my fixed asset performing on different types of projects with different clients. That can also be really helpful, especially with clients coming over from legacy systems that probably most likely did not have this type of reporting previously. So that's another positive impact of tracking your fixed assets properly and managing them.
Okay, amazing. So we have one comment, and let's try to touch that. So, Will, I would like you to touch on this one. I don't know if you're going to have any sort of perspective, but I'll read it for you. So here, Anders is saying that keeping all assets in the ERP, yes, of course. But are there any unusual situations where you wouldn't? Weird stuff like water rights, options on producing future movies, or who knows, moon mining. I mean, that's a very interesting comment. I don't know if the industries that he is referring to and I don't know how water rights are really going to sort of have any sort of implication on the financial value of the assets. So, Will, maybe you can touch on this.
I was going to actually defer this one a little bit because I haven't had too much experience myself with working on independent fixed asset management systems outside of the ERP. So I was going to look to defer to someone that might have a little bit more experience in that realm.
Okay, open floor, guys. Anybody can touch.
Yeah, it's intangible assets essentially,
There you
right?
go.
So they may have a different depreciation schedule, but they're assets at the end of the day. Record them in the system, depreciate them.
Yeah, absolutely. I was just going to say the same thing. So, this is also like in a lot of industries, you find the organizations have tangibles and intangibles, right? And now you might, like in a larger system, you'll be able to take those intangibles and put them in a separate asset book,
Asset class.
and have a depreciation calendars and schedules which can be different from the other tangible assets.
I would say that everything needs to be on the books, because the biggest
There you go.
problem is to have sticky notes on your computer that says, oh, I got an asset over there. It's not on the system. So again, you figure out a way to get these things recorded in the system so that you're not making explanations. Oh, well, we got that over there. Well, where's that in the system? Oh, it's not in there. So there's a challenge to organizations is to really get that visibility and trace. So that's just my 2 cents.
Yeah. Have an asset on the moon on a sticky note. That would be interesting.
Yeah, you got PPE and intangibles. So gotta track everything.
Well, okay, I've got another client that manages about $60 billion in assets. Now, what is that? Now, so you get way out of the road when you start talking about asset management. And again, they're securities. Now they're assets, but are they client assets? And now we're managing no different than equipment that we're going to rent or lease, different use assets. And I think to that point, same thing. We've got to have capability to record those things. And then the revaluation hasn't been mentioned yet either. So I did a lot with currency translation. And, you're a US based company, you got stuff sitting on the ground in Canada. There's a revaluation of those assets for financial reporting. Yes, you're right.
Oh, yeah.
Anyway,
Absolutely.
it's complicated.
That's true.
Yep.
All right, guys. So the only thing we can take right now is going to be closing advice. Chris, what would be your closing advice?
Watch your assets. Don't lose them.
Awesome advice. Thank you so much, Chris. Abu, okay. Do you have any closing advice, please?
Again, track, the biggest issue we find is tracking of the assets. And, I'll just agree with what Chris said. We can't beat that comment.
Awesome. Thank you so much, Abu, for that. Nirav, closing advice, please.
Yeah, classify your assets correctly. Don't depreciate in Excel spreadsheets. Use your ERP system to do that, or get onto the next, greatest ERP system that's out there, right? You are the best asset the company has. So always think of that.
Okay, so he did beat that comment. Awesome. Thank you so much, Nirav. Rajesh, closing advice, please.
Yeah, I would say look at this like a fixed assets implementation project as a great opportunity, right? Because that really gives you an ability to streamline or improve on your existing processes. You can do your asset categorization, you now have an opportunity to change your asset categorization to fit your financial reporting needs better, right? You have opportunities to put in a lot of efficiency in the system. So from my perspective, it's a big opportunity. Don't get scared. Try to use all of the features from the ERP system as much as possible.
Okay, amazing advice. Thank you so much, Rajesh, for that. Will, closing advice, please.
Yeah, I'm just going to echo that. Just utilize all of the areas within the ERP where fixed assets can be managed properly. Use the approval processes for bringing on fixed assets in the AP, calculated depreciation, and make sure that you can run your reports and view the reports on fixed assets that you're looking to build.
All right, guys, that's it for today. If you joined for the first time, this was part of our digital transformation series, for which we meet every Thursday at 5:30 p.m. Eastern. So make sure you guys are going to be here next week. We're going to come back with another topic. On that note, thanks everyone for tuning in tonight.
Thanks, guys. Good interaction. Have a great night.
Thank you. Bye-bye.